there. Well, the very next day, another person was offering just this willing, helpful, not asked for by Esther, helpfulness. And Esther felt so appreciated. She felt so appreciated. Not big things, but she just felt so appreciated. And she'd completely forgotten that moment in time when she wasn't feeling appreciated, because she was sort of living conditionally, and if the condition made her feel unappreciated, then she felt unappreciated. But when the condition caused her to feel appreciated, she felt appreciated. You get what we're talking about. Not a healthy way to live, but almost everyone does it. And in the middle of that, she received a message from this other person, flowing appreciation toward Esther. Esther had just had that airport experience where she had witnessed a woman screaming for acknowledgement of her value while no one wanted near her because of the forcefulness of her discord. And Esther's putting this all together, and she's thinking, well, if I'm spewing, I'm not being appreciated from this particular person. Even if that person wanted to appreciate me, that person couldn't appreciate me. You create your own reality. It's so easy to think that this other person should be appreciating you no matter what you're doing. And they very well may be, but you can't let it in.
What's good? Let's go. About to do another charting from the rip.
When it comes to trading psychology and the developing of winning attitudes, there is no better teacher than the market itself.
Wait like 5 minutes.
After all, the lessons provided by the market in the past will help set the right expectation for the future. We only need to look back over the last decade to see some of the market falls. Such events can and should be expected in the future. A few of our videos in the past dig deeper into trader psychology, and in this video, however, we look more at the discipline portion. Several popular books discuss key concepts in trading discipline, and we learn how to apply them to our own trading and investing endeavours. Author Van Tharp made a great quote through his teachings when he said, "A peak performance trader feels totally responsible for whatever happens in the market, and can therefore learn from mistakes. These people typically have a working business plan for trading, because they treat trading as a business." Once we fully accept that the journey to become a disciplined trader requires treating trading as a business, the journey and eventual path to success will become much easier.
Start at 6:30.
Emotional control is arguably one of the main differentiators between an unsuccessful trader and one that takes a more disciplined route. So how do we become a less emotional,
Anybody take
more
those trades with
disciplined
us
trader?
today? I took one
Mark
on
Douglas,
stream. I took
author
one
of the
off
popular
stream.
book Trading in the Zone and The Discipline.
Anybody get in on those trades with us today? You already know I like the threes. Let me get some threes if anybody was in. Wait till 6:30. Get it going. Alright, let's get it.
Trader links the many trading challenges to that of a trader's perception of the market. The first lesson is to know that the market is always right. Only you can be wrong, never the market. Second, the market does not care about you. It does not care how much money you've won or lost. It has its own rhythm. It is only through experience, trial and error that you begin to accept that the market has no emotion. Only you do. Remember, the market is an irrational, uncontrollable entity. Once we have the right perception of the market, we can then look inwardly at our own psychology. There are three aspects to consider: identifying opportunity, executing trades, and growing equity. Each are, however, hindered by emotional pitfalls, and traders will find it hard to succeed unless these emotions are managed, ensuring they do not interfere with the trading plan. One of the ways we can address these emotions is to create rules, and these rules help us identify opportunities, execute our trades, and manage position size and risk. Such rules take away subjectivity and help our emotions from getting drawn into irrational market behavior. Having these rules is, however, not the complete solution. If we hit a series of losses following our rules, we start to doubt them. Such losses can create irrational blind spots in our cognitive reasoning. The more we're hit by losses, the less likely we are to follow the rules, and this comes despite knowing the market is itself irrational. This cycle repeats endlessly until we accept that losses will occur. We must manage them accordingly with solid risk management and allow the market to do its thing. It's important to note, however, that rules should not be followed blindly. They must be considered from past performance and analysis that supports the viability of the strategy. It goes without saying that following rules to a flawed or unproven strategy could lead to financial ruin. Another important aspect discussed in the book is expectation and goal achievement. Many new traders start with an expectation, maybe targeting $500 per day or achieving 100% annual returns. Giving too much focus on such targets inhibits the trader from developing a robust process. After all, the returns are simply a byproduct of the process. New traders tend to have this in reverse, focusing on returns first and thinking about the process last, an approach I'm strongly against. Focus and energy must always be given to the strategy and the process first. A link at the end of the video expanding on trading expectations may be of use. After completing the study, preparation and creating the rules and process, we need the discipline to ensure we always stay within that framework. Be as mechanical and as emotionless as you can without focusing on the financial reward. Psychology is the foundation of all successful disciplined traders, but there are several flawed psychological biases of failing traders which we should understand. None more so than the gambler's fallacy, or sometimes referred to as the Monte Carlo fallacy. Although the myth is linked to gambling, the same belief is also associated with trading. First, let's take the game of roulette. Imagine a table which has seen the colour of red 4 times in a row. Would you be more inclined to bet black on the next spin? What if the table had 8 spins, all seeing red? Would you expect black to have more of a chance on the next spin? Well, in both scenarios, there is absolutely no reasoning as to why the next spin would be black, or red for that matter. Remember, the wheel has no memory. The probability of either colour appearing has not changed. This is why it's called a fallacy. It is a mistaken belief based on unsound arguments. To date, the longest recorded streak of one colour appearing in roulette happened in 1943. The colour red appeared 32 consecutive times, and with each spin, the participants were sure the next colour would be black. But why is this important in trading? Well, it's because although you may have a trading strategy with a positive expectancy, just like a casino, a losing streak can occur at any time without reason. It does not mean the strategy is flawed. Just like the roll of a dice or a toss of a coin, a trading candle has no memory. Mark Douglas summarized these flawed psychological biases by saying, "When you achieve complete acceptance of the uncertainty of each edge and the uniqueness of each moment, your frustration with trading will end." Understanding that losses are an integral part of trading will provide some comfort when your results are not going your way. Legendary trader Mark Minervini himself says that he builds failure into his system, meaning that he expects his trades to lose 50% of the time, and his other trades to win 50% of the time, albeit his winning trades will be larger than his losses when they occur. If you step back and really accept that losses are at the core of most successful strategies, the acceptance of their occurrence is far easier to digest. It is the managing of these losses that really makes the difference. If you allow a loss to grow out of control, it could make your winning trades less significant. Accept that you will have many losses, keep them small, and make them a core focus of your strategy. Ultimately, embrace the prospect that losses and wins are an inevitability within any strategy, and any outcome is just as likely as the other. Mark says if you can't learn to accept small losses, sooner or later you will take big losses. A key factor to becoming a disciplined trader is the merging of expectation with probability, which ultimately provides the foundation for unemotional trading. The ability to accept trading unpredictability in the short term, but equally have faith in the law of large numbers in the longer term, is what separates the professional from the amateur. You may know the concept of a bell curve. The concept plots a distribution of data points and is used as a measure of probability and deviation. In this example, we keep the concept simple. In the middle, we have trades with an average return. To the left, trades with poor performance, and to the right, good performance. The neutral return is plotted centrally on the chart, and each trade, which remember is a random event, is plotted based on their return. A trader makes perhaps 10 trades, providing random results. At first glance, in the short term, the review would suggest a losing strategy or a strategy without positive expectancy. But remember, a statistical edge should only be measured when we have enough meaningful data, not on a micro level with such a small sample size. The predictability is determined by the law of large numbers. Once we have a large data sample, we can then determine if a statistical edge is present. We already knew from the position of the bell curve that the large majority of trades were positive in comparison to the losing trades, and this provides some predictability on a macro level, the level at which a casino bases its model. Casinos are aware of the need to pay out infrequent large winnings to the minority, but the positive expectancy built into the game will far outweigh those costs. A previous video on probability and expectancy helps explain the theory in greater detail. Leaning on my own trading experience of more than 30 years, I know with certainty that my personal approach will see periods of lackluster performance, followed by periods of outperformance, but by position sizing and managing risk accordingly, the losses and psychological biases are well anchored. In recent times, we have seen a dreadfully volatile period, and most long strategies would have suffered. Myself and many others, on the other hand, remain unnerved, focused on the process, and well prepared for the longer-term market expectation. Once we understand the probability at a macro level, we can set the expectation. And once we have set an expectation, we can ignore the random results over the shorter term and stay disciplined to the strategy. My approach has that long-term macro expectation, and I tend to measure it through the R distribution, which is simply the risk taken and the reward achieved. For example, I know that many of my trades will lose up to 1R, whereas my winning trades are spread from winning 1R through to winning 10R, or 10 times my risk. Having this predefined probability and expectation over a large sample of data makes it easy for me to stay calm when I get a series of losses. Another great quote from the late Mark Douglas said, "When you really believe that trading is simply a probability game, concepts like right or wrong or win or lose no longer have the same significance." In summary, the journey to becoming a successful, disciplined trader requires us to accept that the market does not care about us. We must accept that losses will always come our way, and we should build the management of losses into the core of our strategy. Stop focusing on the rewards and stay focused on the process. Understand that anything can happen. A singular trade is unique and has no memory. Know the longer-term statistics of your strategy and ensure your expectations are aligned. As always, thanks for watching. And if you need help staying disciplined, why not join our group of like-minded individuals where we share thoughts, insights, scanning software, and...
Hey, so it's not an audiobook, I'm just on YouTube. Just going through, listening to some, playing whatever mindset stuff I see. For anybody who needs the chart key, let me drop that again. We're gonna go ahead and listen to some good old Randy Howell once again.
Welcome. You know, when people first start trading, they see the potential and they go, wow, I can see how this thing can get big and I can do all the wonderful things I want to do with my life that I've wanted to. It's going to be great. Then they start trading and the money becomes live. Before you know it, it's very different. What's the secret? What's the secret about becoming a consistently profitable trader? You know, you see some people do it and they do it big, but most just go in and they fall flat on their heads. And where it starts, friends, is understanding about winning and losing and power. You have a section of your brain, the emotional brain, that I often call the caveman brain. And that is a very active part of your brain. It is producing 95% of the decisions you make on a daily basis. The thinking brain doesn't necessarily know about it I mean, the thinking brain's got language and stuff like that, and the emotional brain does not have language. It has emotions. And they're emotions that are interacting with the environment, the markets, and the moment there's a change in status out there, there's automatically an emotion that appears, whether or not the thinking brain knows it or not. And here's the confusion, is that we come in with an enormous bias to win. I want to win. I want to make things happen. I want to make money. Okay? Everybody does. Yet at the same time, the caveman brain that actually is doing your emotional trading knows nothing about money. Money is just an alien concept. If you gave it a boatload of money, it would look and not even have any idea. But caveman is your ancestor, and you carry his brain, the emotional brain, the survival brain, in you. And it has no idea what money is, but it knows what the power to survive is. And that's a lot about this cognition we have. You think, oh my gosh, I'm going to go in and win. I'm going to make money. I'm going to have power, money. And that money becomes a representation of your power to survive, your power to have status, your power to be safe. Okay? And all of a sudden, you take a brain that was developed on the African savannas 6.5 million years ago. It became thinking probably 50,000 years ago, and you're expecting it. This is what's so funny. You're expecting it to be able to handle the confusion, to handle the uncertainty of trading. It can't. It views taking a loss as death. Think about it. If you take a loss, oh, it's a monetary loss. Yeah, I can handle it. I've got this plan that's keep my losses small. Well, nobody clued in the emotional brain, your caveman brain. You know, taking a loss to it was serious business. It was life and death. To die, to lose, was to be consumed by like a saber-toothed tiger for a meal. So yeah, if you get into a trade and it starts turning against you and you're taking a loss, it's going bigger and bigger, it's getting close to your stop, your caveman is going to be activated immediately. There's a change, there's danger in the environment, friend. Okay? And what it's going to do is it's going to fight to the very end. It's going to fight to its death. It'll never want to take that loss. That loss is so powerful. So we have a problem already. We realize that that brain that activates under stressful conditions, uncertainty, because when it experiences uncertainty, what your brain does, what that caveman brain does, is all of a sudden it feels very vulnerable. It feels confusion. And it's built not to do that. It is built to control the environment, control outcome. It's built to make things happen. It's built not to lose. And here you are. All of a sudden, it's coming on a loss. Your thinking brain blown out of the water by the urgency of the emotional brain to address this death threat. So that's what you've got, friends. The question is, now that you've got it, what are you going to do? The evolutionary psychology is there. Okay? You do not want to lose. You want to win, because if you win, you survive the day. Yeah, you survive the day. And you also, because you win, you get prestige, you matter. That's something that all Homo sapiens want. Now, but there's one more. We've got one thing that stands in your way. That's evolutionary psychology. And you're dead against it, and understand, it operates in the background. Your thinking brain doesn't even know it's there. It thinks it's quiet. The beast is so tame. But when the money's real and the loss is really imminent, it's activated. And it just overwhelms the thinking brain. You see this problem? Now let's compound it. Let's talk about your brain's mission when you're born is to build you, to adapt you to survive in the world. That world is your family of origin. It's your extended family. It's your community. It's your culture. And most of us grow up in a world that's highly competitive. We want to win. You know, we don't want to lose. And we're taught that from our parents. If you're in a competitive family, it's all about winning. Okay? Then you get in trading and find out something. You have no control over whether or not you win or lose. In everyday life, you think you do. Unless a black swan shows up, you can control by will. You can just tough it up. But in trading, the trading gods just don't care. So now we've gotten this evolutionary psychology, and now we've gotten this, basically the adaptation process of your brain building you to survive in a particular world. And it just so happens it wants to win. Yeah, it matters when it wins. You prove yourself when you win, and you get status. Okay? And what you don't want to do if you grew up in a competitive family is you don't want to lose. Oh, bummer. I hate losing. I hate losing. How many times have I heard that as a trader psychologist? And yet, the successful trader wins by being an expert at losing. Yeah. He doesn't get sucked into hating to lose. No, it's a skill that you develop and you hone under the crucible of the uncertainty and the risk of losing capital. And you learn to be able to, guess what? Take the loss when your guess is not right. It's no big deal. You're not wed to your hypothesis. If you go in and find out it's not right, you get out as soon as you can with a small loss. You live to trade another day. Okay, but in a competitive family, you don't want to lose. You hate losing. Losing means you don't have status. You're not worth anything. You don't matter. You want to win. You want to make things happen. Okay? And ultimately what you discover is a successful trader is not trying to make things happen. He's managing that beast, that caveman brain, so that it's okay to lose. In fact, he trains himself to say, that was a really good loss. I look at my trade and say, was this a method mistake? No, that's pretty much my strategy. Was it a psychological mistake? No, I had a good solid mindset. Then what happened is I just experienced probability, uncertainty of trading. That's all that happened. And what you need to do is you need to calm down that ancient part of your brain that I'm calling cave brain. If you don't, you've got a problem. It's not going to go away. You're going to have to develop the skill sets to be able to teach that caveman brain of yours how to be in the world today. How do you do that? Well, we teach a process. Part of that process is, one, acknowledging that you're an emotional creature. You're not a thinking creature. Thinking is a byproduct of this emotional nature interacting with your beliefs and the environment. And then what you're going to do is you're going to sit there and go, wow. Emotion is a biological action potential that interacts with the environment for survival. Yeah. Now you're beginning to recognize the kind of thinking that can help you get out of this problem. Then you start going, how do I work with it?
I know it.
And the truth is, you're going to have to redo the way you breathe. You breathe in such a way that accelerates fight flight. You're going to have to learn how to breathe diaphragmatically in tense moments. You're going to have to produce mindfulness that allows you to step back out of fusing and identifying with all these thoughts that run around your mind and all the beliefs you have. There is no you. There's no just me. No. What there is a brain that has organized the potential that you are into a particular structure called the self, that the observer that you are is so frozen to that it now identifies as that's me. Those are my thoughts. No, they're not. You are not having thoughts. You are being created by them. They come from history. They come right through your family of origin and through evolutionary psychology, and they interact with the uncertainty. That's what happens, friends. You have within you the capacity of changing the emotions that give rise to the mind that engages uncertainty. That you have control over. You don't have control over outcome, but you can redo the beliefs that you learned in your family of origin and that you inherited by traits from your evolutionary psychology to produce a mind that when it is trained to engage uncertainty with the disciplined impartial mind, it calms itself down. It calms the caveman brain down. It also turns toward what it fears, to master it, not to conquer it, but to master it. That, my friends, is why trading, amazingly, is the most powerful self-development avenue that I've ever met in my life. You have to learn to rebuild the mind in order to engage uncertainty successfully in trading. You can get away with denial forever in this ordinary life, and it catches up with you sometimes, but in trading, the time compression between cause and effect just slams you, and you cannot lie to yourself. You have to become honest with yourself, and you have to look and say, I am going to rebuild this brain, this mind that I brought from history into this moment of trading, and I'm going to have to retrain it to change the way it is going to reactively react to uncertainty. Instead of fear or anger about taking a loss, what you're going to do is you're going to have a disciplined partiality and recognize that it's only probability. All you really did is land on the wrong side of probability relative to you. And even more than that, when you win, that's all you've done too. There's no reason to get up and gloat. All you've done is landed on the right side of probability relative to you. That's all, friends. That's what the successful trader knows. He's learned to just taking a loss is just taking a loss. It's not about me. Okay? It's about the mind that I bring into that moment. Successful traders learn how to lose really well. And they also learn how to calm the winning stuff down. It's just probability.
Hey, what's going on, Grace?
You're managing probability. That's all you're doing. You don't have control over the future. Friends, this can be learned. Come to my website. Take a look. Start reading. Get the free book. Go deeper. Read my book. And then start looking at how you can really change. Come and learn, friends. Come and learn. Thank you.
Good. Glad to hear. We're just here charting this up, seeing what's going on. Listening to some Randy Howe. Whoa.
How do you build a winning trading psychology mindset? Let's start with what is your goal in trading? May sound weird, but it's not. You know, most people, their goal, quite understandably, is that they want to make money. They want to win. And they certainly don't want to lose. And most likely that's proven successful in other areas of their life. And so they bring that success formula in about winning, and they get to it, and all of a sudden they discover something is really wrong. Somebody didn't say something to you because you're unprepared for suddenly, I can do it in simulation when the money's not real. But suddenly when that money gets real, all sorts of stuff starts happening. I can no longer actually trade my plan and plan my trade. It's just boom, it's totally different. So you're looking at that goal and saying, yeah, I want to win. I want to be financially successful. Yeah, I want to make money. Every day I get up thinking, I want to make money. Well, this is the great divide. What you're going to have to decide in order to evolve into the trading mind that can produce success, you're going to have to decide whether or not winning is about making money, or if winning is about performing well. Spoiler alert, making money, focused as that's the definition of winning, is not going to work. Performing well will. And then, to be able to build that successful winning trading psychology mindset, you're also going to have to learn how to lose. exceptionally well. And this brings us to the paradox between winning and performing well. Winning and performing. What do you really want to do? A lot of people come into trading with substantial success, winning ways from businesses, from corporations, and they think, golly, this thing has worked so well in lots of areas of my life. I'm just going to duplicate this system of success I've had in one domain, and I'm going to bring it, guess where? I'm going to bring it to trading, and I'm going to produce success there. Yeah, that's just what I'm going to do. They do that, and understandably, you can understand why they bring it. It's produced success in the past. Why not now? The question, though, and this is the flaw in the traditional winning way, is that can you control winning in trading? Not in your other business or corporation, but can you control winning in trading? No, you can't. And yet, your entire brain is organized to be able to win versus being patient and waiting. It's a paradox, friends. And what I want to do is I want to give you an example of two apex predators, each adapted for a different environment. There's nothing wrong with the success that you've experienced in other domains. The problem is, it's built for that environment.
Hey, of course, anytime, Grace. I'm happy to help.
Not for the trading environment.
I was just telling my friends the other day, it's the one of the best feelings when you're trying to show something new, and then it finally clicks for one or two people at a time. Slowly but surely, I hope it clicks for everyone. I love that feeling. Love seeing that.
And the example I give is the difference between the African lion and the American cougar. One hunts on the savannas of Africa in large packs that they constantly have to be breeding and building more population because the way they stalk and attack, they end up having lots of injuries. They have lots of losses, major ones too. You get kicked by a buffalo and most likely you're going to lose your jaw. You get gored by impala and it punctures a lung. So they're constantly having to replenish their capital, more bodies for hunting. That success story works well in those circumstances where they have the ability to breed very large amounts of puppies coming up to replace all the losses. Okay? Now, you took that same lion, incredibly successful, and take him into the American forests, and guess what? He starves. Yet, there's another apex predator, the American cougar. And what he does is he has a completely different strategy. He's not stalking. He's not chasing. What he's doing is he's ambushing. He's an ambush predator. Ambush predators have to have a lot of patience. And what the cougar does, he climbs a tree, goes out on a limb, looking right down to where the deer is going to pass. It's a setup. And then he waits patiently, and you might look at the cougar waiting patiently for the deer to set up in the trap and think he's just lazy, he's just sleeping. No, he's not. He's calmly waiting for his dinner, for reward. When the deer comes into that trap, into that setup, it drops down from 20 feet, got a head of steam, and hits the deer in the head and the neck and snaps it. The deer drops down, dead. There is no struggle. There's very little losses. And if the deer does get up and leave and runs away, the cougar's not going to chase. What it's going to do is it's going to cut its loss. It's going to climb back up in the tree, go out on the limb, and wait for the next deer to show up in the setup. Sounds a lot like trading, doesn't it? Well, it is. And what you also see is alphas coming in with an idea of success and realizing that in the environment of trading, it just doesn't work. Yet, you take a look at what the cougar does and understand it's alpha. It's apex predator, man. If you've ever been around one, you know what I mean. And what you see, though, is they hunt differently. They're patient. They're focused. They're ready. And then they ambush. That's the whole point. And this is where you're going to have to learn to be a different kind of hunter than the one that you came equipped with. And this, my friends, is where you begin to have to realize that you are going to have to evolve the trading brain. The one that you brought with you, okay, it was also built for the African savannas. It was looking out and finding all sorts of reasons to be fearful because we were a hunted type of animal. And all those lions, tigers, and bears are gone now, but yet we're there. We bring that, and we were hunter-gatherers. Our huntings went out and stalked. And we stalked big prey, okay? Yet, we take that mind, and we take it to trading, and there's a couple glaring problems. One is that brain is built to win. It is built to control, particularly control outcome. It is built to be right, because to be wrong was to be dead, okay? And it was built to find causal relationships in things in the environment. That's much like you using technical analysis to find out where the exact bottom is going to be. That's the causal relationship. All those things allowed us to become an incredibly successful species. Then we took that brain designed for that environment, we took it out of that environment, and we put it into a completely new, different one. One that it's not adapted for. Trading. Where you have no control over outcome, maybe a probability, and also that desire to make things happen becomes a liability. You know, that can-do attitude becomes a liability. You have to have patience. And are you going to win? No. Are you going to do a lot of losing? Yeah. And you're going to have to become a superb loser. You're going to have to see losing as just part of the game, and you're going to have to learn to do it incredibly well. So ultimately, you've got a problem. You've got a caveman brain that you brought from antiquity, but you need a probability-based mind that is alien to the caveman. You're going to have to build that. And what's really interesting is the whole notion of winning and losing really has to change. That's at the core of the problem. Winning, it makes you feel good. A truly good trader, when he wins, he actually goes and makes sure that he doesn't exaggerate the overconfidence. He stays calm, he stays clicked, and he knows that he does not control outcome. What he did is he landed on the right side of probability relative to him. Okay? He didn't make things happen. He had probability on his side, but he didn't know, okay, which way it was going to fall. That's also why he has to be a good loser. If it doesn't happen his way, if his guess is wrong, he needs to keep that loss small rather than adding to it or blowing it up or revenge trading or going crazy. So that's that winning thing. And what happens is that when you do lose and you follow your rules, you learn to shape that behavior. You learn to congratulate yourself. You have gratitude that you followed your rules, okay? And it didn't work out. That's the probability. This is training, deep training. And you have to get inside and find that part of you that has a deep desire to win. And you have to calm it down. You have to retrain that. You have to cool it down. So ultimately, this is about becoming a good winner, landing on the right side of probability, whereas losing really becomes landing on the wrong side of probability from your perspective. It could have been the other way, but the thing is it didn't hit that probability, and you just simply take the loss, because if you don't take the loss at where it no longer feels your plan, that's the edge that you have in the market. You're gambling. So you're going, wow, being a good winner takes all the fun out of trading in some ways. Well, it does. It makes it pretty boring sometimes. Being a good loser is an engagement, and you realize you have to, instead of going, oh man, I hate losing, it's going, no, I did a really good job. So ultimately, what do you control? You control the mind that you bring to the performance of trading. That's what you control. Not the outcome, not making things happen, not being right, not being wrong, or predicting. what happens is you bring a mind that can perform really well. It can stay calm and cool, collected, disciplined as you're engaging uncertainty. What you've done is you've lowered the threshold between fear and uncertainty. The caveman brain can't separate uncertainty from fear. And there you see the problem why so many traders lose. What your job is to do is to manage that performance and stay in the moment of performance as you trade. That's the key, friends. Come and learn, find out more. Go to our website, read the articles, watch more videos, kind of look in to see what the programming is. Get the book, get the free ebook, all of that. Come and learn, friends. Have a good one. One of the most common problems for alphas, the winner, the one that wants to win, highly competitive, is that
Randy Howe don't be playing. He be going ham about the wins. Don't worry about your winners. Focus on the luck. Focus on the risk.
at some moment in the evolution of a trader, they realize they have to grow up. They have to truly evolve from who they were before they were a trader and really become the kind of mind, the kind of person that can produce success in trading, because there's a difference. There's a huge difference. And the question is, when did you wake up? Usually there's a story behind it. You get into it with all that idea about, boy, you can really ratchet this thing up. You can see the number of games, and you can see what trading can really do for you. And then you think of all that personal freedom, all that stuff, and it's just intoxicating. You get into it, and before long, you're working. You realize, I have to be able to learn all this stuff, have this knowledge base, so that I can achieve those goals. And then, 2, 3, 4, 5 years pass. And what you notice is you're still behind the game. Success is still around the corner. But every time you get there, it's like a mirage. It keeps getting further away. And so you start with going, what drove me? Usually, it's money. Yeah, you just think of the personal freedom. You think about the ratcheting up, all that stuff. It seems so great. Then, a lot of traders, once they get in, they get fascinated by the whole notion of working with the markets and really seeing themselves work in probabilities. And they're hooked. And it's good because they love what they're doing. So what happened is that you got drove for one reason, you evolved to another, but then you discovered something. What do you find? It's not working. It's not working at all. And then you go, well, what happens? What's now? And this is when you have to really begin to say, am I going to take responsibility for myself as a trader? And what I want you to do is take that word responsibility, and I want you to break it in half. And what it says is response dash ability. Responsibility in its original form was literally about having the ability to manage the response that goes on to different things out in your environment. Boy, nailed it right here in trading, because what you have to do is, being responsible is not enough. You have to become responsibility. You have to develop that responsibility so that you move from the kind of brain and mind that you came to trading with. And that's going to work. It's not going to work, friends. That brain is built to control outcome. It is built to be right and, God forbid, wrong. And it wants to predict outcomes. It does. You get into trading and discover is that you have no control. It's an illusion. which freaks the brain out. It's been built for God knows how many generations to be in control of the environment, to be right, to live, okay, and then be able to see causal relationships that allow predictions to be made, where those woolly mammoth are going to be at this particular moment in time. Then you go, wow. So my job is literally to build my responsibility to a very different world than I originally was built for. Yeah. The world that you were built for through psychological evolution, evolutionary psychology is the way a lot of people call it, and your personal psychology truly has built a person that was successful, adapted to a particular environment. The problem is you're going into a different environment with a very different set of rules. It's like asking an LPGA golfer at the top of his game to play baseball. You remember Michael Jordan did that, and he was the greatest basketballer of all, but when he went to play baseball, he was not the greatest. And so there's a need to adapt. And that's where the problem really begins. Your brain is organized around fear. And that leads to fear and aggression. If you can't avoid the threat, you attack the threat. That's what you come to the game with. It wants to avoid, and threat to your emotional brain is very different than what you think of as, oh, well, this is probability. No. When you're wagering cash on a risk and getting into it and realizing you could lose, the emotional brain's thinking,
Alright gang, let's run through it real quick from the rip, right? So again, I just showed you how I would follow the price, right? From the start all the way through, right? We could go through and clear up a little bit more. So you see, the main thing is to look for these trend lines, look for the breaks, look for the people trading, counter trend trading, then the trend line, right? When they get trapped, then you want to try to find a good entry, right? I almost want to mark this one. It's a little tough, but I might want to mark that one. Alright, I'm just trying to make sure I got everything good. Even here, we can draw these little trend lines. I know it seemed like it doesn't matter. Oh, yes it does. Find information when you are drawing these trend lines. Like, right, I'm looking at these two legs over here. Come to notice, they're really doing this leg and move over there, right? Even if it looks like a lot, draw them all possible. Just little details that will help you. For example, right here, everybody's trying to sell, right? And I still wouldn't enter in here, but I did see an entry in here that was interesting. Because now you got a down move. Even if you want to draw it like this. But I don't think so. I would draw it a little different. Hold on. There we go. So you got this down move. Needs a break, new extreme, right? Gets a break, literally gets a new extreme. Whether you want to, see it or not, let me move this red. So this downtrend is in play, right? That's why you want to know when to pivot. Because, yeah, we're looking for the break of this big trend, right? Yeah, it did a break. What do I need to trigger me to do that buy? I need to see the downtrend play out. Once the downtrend gets the new extreme, I'm still looking for the break in this new extreme up. So just see when it could just make you be a little bit more patient and wait for one of them to be perfect and give you the play. It's gonna come. It'll come. I see it all the time. You guys see it now that you've been doing the 50K challenge. You guys should see it, right? So yeah, Again, let's go. I'm just putting in some breaks so you guys can follow along, right? Look for the breaks, look for the new extreme. Once I get the new extreme, I'm expecting some ranging or reversal. Today I could actually see a pattern that was going on a little bit. Alright, so let's go through it. Let's run through it real quick. So we started, right? We already did this. So from yesterday we had said if we're looking at price, we should look for another leg down like this, right? Remember when we finished yesterday? So if you weren't here, we were looking for this leg down regardless. Once we pull back to the 21, because I got one leg, you can kind of see we're trying to make that connection piece in here. We get an uptrend here, break new extreme. We were expecting some reversal. So now we're looking for the down move, right? You don't see anything here to get in, but I'm following along. Just because I'm not in the trade doesn't mean I'm not following price, right? Let me actually draw a big one here so we can follow along. Right, so we get this downtrend break, right? New extreme. We're expecting some reversal, but it doesn't reverse, so instantly I have to adapt. I'm drawing a bigger trend line now, right? And you can see one here, one bounce here, one bounce here. This is valid. The reason I'm making this trade a little aggressive and low probability is because even though we got a break new extreme, like we said, it's not reversing, right? So, okay, it's not reversing. I can't argue with the price. What do I see? I get a low right here. It breaks above once, comes back down. That's a first entry short, right? And then it comes back up for another entry higher, then gives me this bar. It doesn't touch the 21, but this is a late night trade, right? This is probably why it can't reach the 21. But again, this is the setup, decent signal bar. You want to at least take it down. What you'd be looking for is you'd measure this one leg down, copy and paste here for the break, right? And you're looking for that second leg down. And that's exactly what we get. Now when we get that break, new extreme, I'm looking for reversal here, right? I already got one leg up. They give a leg down, right? Already expecting another leg up because I'm expecting reversal. Once we get this new extreme here, I'm already expecting reversal from this point on when I see the green bars start to come in, right? I get one leg up. This leg down, I start to measure them because this leg down might come into play later. Like, it's some information that you want to save. What do I mean by that? It's like, this is about a 40-point retracement. I want to now see, because I'm going to get a reversal, how big the first retracement is. Maybe it'll give me a clue for the later on, right? We got an uptrend. See, I'm measuring this retracement, right? This is about 44 if you really stop it here. Right, 43, 44, just kind of almost like this, 4 more points, right? So again, boom, we get another push up. Why this is significant and why, like I said, I like these measurements. From here, I get a 0, first break below, pullback. This is a second break below, right? So this is going to be the second attempt for them to break down here, right? Let's see, let me make sure I'm saying that right. So I got 0. Technically, no. I got 0. I got first, pullback second. All we have here is this break, and then they give this higher low. Now, I guess you can say we have a clear support area to the left, right? So if you want to risk that, like I said, not too high probability, because this is the bar we want to see color change. That doesn't happen. The next bar color changes, so you could do a double bar entry where you're entering right above that bar, right above the red one. You would enter. Let me try to move this. Take this off. You try to enter right above this red bar, stop loss below here, and then look for your targets. So again, just like this, right? Risk to reward tool. I'm entering here. Stop goes here. Where should I look for? At least 934. We almost get there. I would think you would get out here, right? Once you get close to your target and you break this high, protect the highs. Even though you're looking for this, you never know, right? You don't want to get caught in the trade for a couple points. That'll be tough. They don't come and stop you out though if you do stay in the trade and eventually they do hit the target. So how you would probably look for that, right? We have one leg up, we see this move down, we get a break for the move down. This break is also our break for this bigger uptrend, right? So I'm looking for a break here, new extreme for the downtrend. Perfect. Now I could get a what? Possible reversal. And if you're still in the trade, you want to look at this because this break means you still need to get this new extreme here, right? And not only get the new extreme for this uptrend, you get the new extreme for this and this big one. So now you'd be expecting reversal once we get the new extreme. Let me move these for a second. Give me one sec. Let me move these arrows. Yeah, again, this is my chart from before. Where are these arrows? Okay, yeah. Can move this up here, this here, this up here. Okay. Oh no, here we go. Alright, so once again, yep, we got this new extreme. We're expecting the reversal, right? Could break new extreme. After the break new extreme, we expect reversal. Just again, for reference, downtrend, break, new extreme, expecting reversal. I'm now looking for a setup to get in the reversal if possible, right? This is our first one here if I'm expecting reversal, right? Not high probability because still a higher low, but decent. You can mark this as a higher low here. And it actually comes back into play later. But again, I've seen them, that they've clearly been doing this earlier, right? Because technically you can draw a range here. They might be a lot, but I'm gonna put it there for a second so you can see. Technically we have this top, technically we have this bottom, right? Come down, boom, right into the 21. We're about to get that little failed breakout action. So I don't want to put that there, it's a lot, but just know, a lot of good reasons to look at that one. Now again, we got that failed breakout. We're looking for that move down. That's exactly what we get. Right? Move down, no way to enter though. We get a break, new extreme though, right? So I'm not in the trade, but I'm keeping track. Got a break, new extreme, right? Looks like even 2 legs down, if you want to measure it almost. And I love when it's 2 legs down to end the move because that gives me even more conviction for the reversal. Break new extreme, break new extreme. Right, so now I got a push down, back up, right? And then I get another push down. This one's a little higher, right? So again, I'm looking for measured move. I got it, reversal, 2 measured legs down. Now I got this, and I got this double bottom with this green bar. If I'm really so confident, right, and I'm looking for the reversal, and I'm being aggressive with this strategy, I'll try this double bottom because I already know I'm looking for reversal. See what I mean? Put it all together. Signal bar comes together. You got this range, you got the bottom of the range. We've seen over here, we've been hitting the range. Again, just to put the visual back on. We've seen them kind of doing this move for the up move, right? We come here, I got this top here. We've had this a couple times here, right? Red bar, green bar come in, stronger than it, push out of it. All right, whatever, I'll leave it. I know it's a little messy, but again, just so you guys can see, I'll leave it. So right, we can recognize this pattern here that's been happening today. All right, I find a couple patterns today that's been happening. This is one, and then this other one is here. Take notice of how every time we get the break, new extreme, we start ranging, right? I get a break, new extreme again, we start to range. I take notice of that, okay? So when I get a break and I get a new extreme, it usually causes a range. Now here, keep that in mind, right? I'm thinking reversal already. I got this bottom here, this is 0. I got first entry short, second entry short. This is now my 0. It breaks up. I got a first entry short, pullback, second entry short. I don't like this signal bar though, so again, why I wasn't even interested in this area. Then we break up. So from here now I switch. I'm not counting from the bottom, I start counting from the highest point. From the highest point I get a breakdown. I get a first entry long, pullback. This is gonna be second entry long. I love this trade. I missed this one today, but I love this setup. If you really look at this, this is prime time setup. I've been looking at this one all day because we literally get leg down, then immediately after the push up, we get the second leg down. Boom, green bar. You love that setup. This is prime time. And what are you looking for? Because we have this break. That's why we don't counter trend, right? That's why we don't counter trend. That's why we draw the trend line. This trend line is telling me that I should be getting an attempt to take out this area here. So boom, I get first push, push down. This second push is where the smart traders are gonna come in. Plus I got this box and I got the fail breakout, which we've been looking at, right? Look how many times we get this motion. Red down, green push up, explode. Right? Red down, green push up, explode. But look how we got that bar color change perfect. Boom, enter there, target here. Good solid trade. So far, this one is a decent one, right? Still yellow though, not high probability. And this one is decent, but this one is textbook. Hold on a second, I gotta mark my 7:30 level. Again, I marked the 7:30 p.m. level on my ES and my NQ chart. Comes into play an awful lot during the day. Just a heads up. That's always my orange line. Okay, so boom, if you're in this trade, solid trade, right? You could trail by the EMA or you trail your 20 points, lock that in, keep going. How would you know to possibly get out of this trade? Now, the same things we looked for to get in, right? If I'm in this long, when I get a break and a new extreme, I'm contemplating maybe getting out or at least putting my stop close to the 21. At least trail at the 21, right? If not there, what happens again? We get another trend up, right? Same type of motion though, right? So we get this high. The only thing is we don't really get a setup, but they give you the same high or low. So again, you take notice of that. Okay, I'm getting high low here, right? I'm getting basically higher low here as well. Another keys. When I see the bar color change at the 21, and now I get another one here. So not only am I seeing the pattern of the break new extreme ranging, I'm also seeing that fail breakout higher low action, right? Keep happening, keep happening. Take notice of that, remember that. Now, maybe I'm still not out or I get out there, but what can I still use? I got an uptrend, break new extreme. Now I should be looking for potential reversal. This is where I trail my stop very tight. I get this high, I'm trailing my stop probably here, at least, right? You see this red bar, I'm putting my stop right below here. I don't care. They can stop me out, especially if I'm in from here, right? Solid trade. Now, we gotta move down. We're looking for that reversal. What do I get? In the move down, I get an overshoot. Remember, the overshoot in the downtrend should mean what? That I'm possibly gonna get some reversal, some bullish pressure, right? Then I get this uptrend, so I know the reversal is valid. Once I see this green bar, I'm definitely thinking, okay, sit back, let the reversal come in and see if we could get in, but just watch what happens at the 21. Okay, I get a push down, so from here I get a first entry short, pull back. This whole thing is a second entry short, right? This whole thing is a second entry short. Now, technically, why do I have this mark? Watch this. I got this downtrend, we're still supposed to get a new extreme, even though we get the overshoot. Somehow it's wonky, but we still get it. I just sit out of it, right? So we do get that new extreme right here, right? We literally do. Boom, so now I'm thinking reversal. On top of that, I have this range here that I've been playing that you can see. Even if I have the range here, it looks like a failed breakout, right? I would still be interesting because I've been seeing this all day. Boom, push, red, all of a sudden green, push off the 21, right? This one's below, but then what can I visually add that maybe looks for context? Like I said, I'm looking for the reversal. I got the new extreme, and then visually I could just see 2 legs down. Like visually, can't you just see that? Like 1 leg here, the pullback, 2nd leg, right? Visually I can see that pattern. That to me is a connection piece for us to continue going up. Because this is 1 leg up, this 2 legs down is just a connection piece, and I'm looking for the next leg up. So that's why I would attempt that one there. Decent. Again, not high probability, we're not above the 21, but if you're playing these levels and you're playing this support area, you can still say you got some support. What you could definitely look at, right? Because last time we hit here, boom, we just all of a sudden reversed. So boom, maybe you're in that trade looking for this high, break new extreme. Once you get the new extreme, look to trail your stop tightly or trail the 21, right? But once we see this, we're still looking for a reversal now. Break new extreme. Look at the patterns still playing in, right? Like the patterns were really in play today. Break new extreme, a little bit of range, reverse. Break new extreme, little bit of range, right? We don't get the new extreme, but a little bit of range, new extreme, reverse. Break new extreme, ranging, we're looking for the reversal, right? So boom, we're looking for the reversal from this point. What can I do to get in? I can either look to get into a, right, some type of triple test here. This is really aggressive too. If you had a better bar, maybe if you want to be aggressive, but this just doesn't make me interested because technically, right, what am I looking at? I got 0 here. I get a break below right here, do I? Nope, no break below there. So I got 0 down here. First entry pullback, 2nd entry short. So this is my 0. What do I get? I get a break up, first entry short, pullback, 2nd entry short. Right? So I'm not taking that though because I'm not taking the long because this new extreme, I'd be looking for the reversal. So if I'm looking for a reversal, what do I count? Now I count the opposite way. I count from this top. Come down, I get a first entry long, pull back. This is technically a 2nd entry long. Like I said, I'll mark the area, but I would more so really be looking for a better signal bar. Like here, I'd really like if we had, let's see, do we got any signal bars? No, we don't even have any signal bars over here. But I'll show you the signal bar for the next trade. Well, basically this signal bar here, if we had it there, perfect. But we don't, so we be patient, right? Don't want to take this low probability trade, even though it's the spot. What time frame is this? This is all, I'm always on the 2000 tick chart. All right, I do all my trading on 2000 tick chart. The strategy I show you though, it doesn't matter what time frame. Whatever time frame you want to use, you can use. You can find the same exact strategy. Right? So I'm looking for reversal. Now this is my 0. I get 1 break up. It breaks back below the EMA. What am I looking for now? I'm looking for 1 more test to break up, right? Because I got 0, 1, pull back 2. Oh man, this is sweet. Hits off the EMA, hits my trend line, and I'm looking for the reversal already. I got 1 leg down, potentially looking for a 2nd leg down. This is an A+ setup right here, prime time. If you're still playing this range, yeah, you came back in the range, but I'm not even putting that into consideration. But you could, right? You would be testing back the top of this range. And like I said, breaks back underneath the EMA. This was a green bar. Got wick down, body turned red, looking for the momentum. That's sweet. Now, again, these are the trades I'm always waiting for. This doesn't happen all the time. Look how many trades I've shown you, and they're not as perfect as this one. I love these ones though. These are the ones I'll wait for. This one I'll probably skip. I might try one of these failed breakouts, or I might try the higher low, but this one I would definitely take. Right? You enter, if you want to see how you enter, you literally wait till the bar closes, you enter one tick below that, stop loss goes here a few points above, and this is your target, 940. You would have entered at 1146. You're looking for 1203, so maybe like a 20-minute trade. That's how long the trades have been recently. 20 minutes, 15 minutes. So now break new extreme. You're looking for this leg down. Target gets hit. Nothing for us to trade over here. If you're not already in this trade, right, nothing for you to trade. If you're in this trade, you look for the break new extreme. It's happening, it keeps going. When I see this green bar, I probably put my stop here, or I just trail my stop at the 21, right? That's really my key now. If I get a trade like this that breaks below, I want to trail the 21 really by maybe like 10 points behind the 21. If I'm not in big profit, I'll just trail around the 21 by a few points, 2 to 3 points. Right, so even here, 2 to 3 points behind, I would still be in. Right, so maybe you still get in. Right here, maybe you get break new extreme for the downtrend. So again, either you get out here or you're still trailing 21. Now, when I see this last break here, new extreme, I would trail my stop literally right here, because there's so many break new extreme. The reversal should have happened right here, possibly. Right. We were looking for reversal down there. The reversal up should have possibly happened here, because we got the new extreme, but we had a little downtrend, right? New extreme. Now we got this other one, break new extreme. This reversal point is definitely interesting, right? And also I got 2 legs down, and we've seen today when we're in the down move and we get the 2 legs down, you could easily get a reversal, right? So remember, we're thinking about that. So when I get that break new extreme, not only that, if I count from here, right? So this is my 0. I get a break above here, 1, pull back 2. So this is my 0. I get a first entry long, pull back. This would be my second entry up. I want to enter here. Target is 927. Target hit. Now then you would be in this trade from 101 until at least 116. So again, about 15-20 minute trades happening right now, right? Now I'm still thinking up move here, right? Because we're thinking this reversal should be strong enough. I don't have an uptrend around this move, but we can try to find one. Can't find it here. See only one move here, so can't really find an uptrend. Unless I come here, shave this top. You'd have to just try to fit all of this in there. Now, if you are playing this trend, right, you can see a little bit tightness there. So again, I'm always trying to find some type of trend line. I don't care. It's always there somewhere. So I got this break. Right? Technically, this bar right here is my first break below. Then I get a pullback. This is going to be my second break below. I like to trade the second break belows if I'm looking for an up move, right? Because the second time they try it, second time they should give up. If I get a green bar here, nice. I enter above this. Now, this trade was different. I'm going to show you guys a video real quick, but this trade is definitely different than how it was earlier. Because when it was earlier, this bar actually turned green, and we entered above this bar here. That's what was so confusing. I realize now it was a little confusing to me earlier, because I was like, I know I took a trade here, but I don't remember taking it like this, and I'll show the video after this. Are you saying when we have new lower low, it's a high probability of reversal? Yes, exactly. After the trend line. Right? So if I'm in a downtrend, right, I get a break. This is a break right here. Right? I get a break of the trend line of the front side, not the back side. This is what I call the break. And we get that push to the lower low. there is now a good chance and good probability we're gonna reverse. I don't like to take, instant reversals all the time. I like more context. Like these 2 legs down is why I would trade this nice bar right here, right? You can tell this was a red bar. It turned green. I'm looking for that reversal. So already I would be looking for reversal here. If I'm in the trade, perfect. I'm still staying in because now I'm looking for this uptrend, right? Just like we said, we're looking for those lower lows. Now I'm looking for higher highs if I'm thinking price is going to go up, right? And I would love to join if they give me the opportunity. What would give me the opportunity here is a green bar, nice strong green bar. Boom, and like I said, I get that strong green bar. I enter above here, stop loss goes below here, target is at least this high, right? We got to the high, and again, this is what I mean. I got to the high, I started trailing my stop below here for my 20 points automatically, because I know also we had this range, we could get this reversal, and also we had a big down push. Yeah, I'm looking for a reversal, but I know after break, right? After break, new extreme, I can get what have we been getting all day? Reversal. So I want to keep that in mind. If it keeps going, it shouldn't stop me out, but if just in case it does, I trail my stop. Boom. Good thing I did today, right? If it kept going, if it came out and stopped me out, okay, we'd be like, oh, it got out too early, but I don't know. So I'm just gonna protect my profit. Boom, boom. Right now we get reversal, get a break, and now look, Grace, just like you were saying, right? I'm looking for a break. I'm looking for a higher high to get put in. They put in a higher high by a couple ticks, like literally half a tick. Like this high is 47, this high is 48.25. That's like not even a point, right? Technically, boom. But that little new extreme, now look how easily that reversal happens, right? They were trying here, they couldn't do it. Why? Because technically price action rule, if it's valid and they're respecting the trend line rule, we should get a break, then we should get that new extreme. So that's why I'm always drawing. I love this setup here. And again, we've been seeing this setup all day, right? We've been seeing us crashing into the 21 previously over here. We crash into it, a green bar comes and we get that push. We get a new extreme. Right here again, we crash into it, we get a break, right? We get that new extreme. And earlier we had one over here, right? We get that break, boom, new extreme. So this is why I'm always drawing these trend line rules. Drawing these trend lines, following the trend line rules. Drawing measured legs, right? Looking to visually see, boom, 2 legs down. Now I get a break new extreme, right? Now look how we get the reversal, and what can help me? I got a leg down. I thought we should reverse here. Not good signal bar, so nothing interested for me here like this one, right? Now I know possibly I might not reverse. I'm just watching, right? Even if I'm not in the trade, I'm just watching. And boom, I get 1 leg down, pull back, second leg. Now we don't get perfect measured leg down. Maybe let's see, even here I can do that. Adjust this leg. Never afraid to say, oh, might be off, or I might be wrong. Remember, I'm drawing these things myself. Price isn't giving it to me, I'm drawing it myself. I don't know, I could be off by a little bit all the time, right? Now I'm looking for reversal. I get this higher low right here. This is just tough because I would really like to see us break above the 21 and give this higher low. That's why I'm really not interested. I just feel like we could have easily broke above. Now, if you want to still be so aggressive, sure, you could mark it, but for me, I'm not interested in this. But if you still want to be aggressive, still playing the bar color change, boom, we break up, boom, we're supposed to get new extreme, it's tight, but sure, fail breakout does work out in the end, right? And again here, right, everybody's looking to sell, right? Get a first entry, pull back, second. Here's interesting again. Wish we just had a better signal bar. We had a better signal bar earlier, and I took this, So again, I'm gonna show this trade how we get a different signal bar, but I took this trade after. This was not a part of the 50K challenge, but I did. Again, this is why these places look a little different to me today. I took this one because I had this uptrend. I was looking for break new extreme. Okay, we get a little break new extreme, and then technically we just get, boom, just 2 legs down instantly. Like I got one here, and I just get a second one immediately. Right? Now I can look for reversal, because technically trend line, the downtrend, got a break new extreme. I got 2 legs down, got this top, first entry, pull back second, just looking for at least this high again, right? And it just kept going. I stayed in this trade here all the way up to, I think I got in at 9:30 and I got out at like 9:80. So yeah, I got in here, yeah, see 9:30, and I got out at like 9:70. Yep, when we started doing this red bar, got out here. And now you can see, right, we're just moving over into the next day. We got a break, we got a new extreme. What are we getting? Reversal. Is this part of our trend line rule? Yeah. So, like, literally, I promise y'all, just try to draw these trend lines and try to follow them for a couple times, right? A couple days or something, or even a couple sessions, and just see if it helps you to stay on the right side. If I have a trend line, I get a break, I'm not counter trending. Just remember that. That's why we draw. I get a break here, I'm not looking to sell. I'm looking for the new extreme. Then I could possibly get the reversal. Right? Just look how when you get that new extreme, the reversal is more, you know, they can have more of a chance. That could happen. Just look at this, right? We get the uptrend, break, everybody starts selling. EMA, I'm waiting for the EMA to show me that bar color change or give me that equivalent green bar, which they do. Boom, new extreme, right? I get a downtrend break, new extreme. Look how we could get that reversal, right? Everybody starts buying here already. No, don't start there. Wait till they take out this low, make a lower low like Grace said, right? Then we reverse. Just look how many times you could follow it. Trend line here, break. Everybody's trying to buy already, right? We get a first entry long, pull back second. I wish we just had a better signal bar, because this is perfect, right? If we had the first entry pullback, second entry short, we get this lower high, we get a better signal bar, like something like this one right here. We would still be interested in this area too, because we're looking for new extreme. So see how I'm either trying to get in to take the new extreme, right? Or I'm trying to wait and be patient to look for the reversal of the either green bars here at the new extreme or higher lows to get the reversal. Alright, so yeah guys, that's really it. But once again, this is how we follow the price. This is the method to my madness on all my charts. I could take y'all from scratch. And again, you guys get to see my thought process and why I take these trades. Any questions, gang? Please let me know. Alright. Again, always send me some threes if it's helpful at the end of the session. I love to see the threes. Send me some threes. I love the threes because first, I'm looking for the first entry. Second, I'm looking for the second entry. Third is usually when it's valid. The third is where I get to enter. 3 is also my favorite number. So hell yeah, baby. Again, send me those threes. Anybody else got any questions? Message me on Discord, Instagram, even here on YouTube. Leave a comment. I'll get back to y'all. Great stuff. Hopefully that was helpful. Rocky Young, shouts out to you. 3 gang, baby. Always. Yeah, man. Let me know. I'll keep doing these, more often if we're really finding them helpful. If not, I'll just still do it. I do this on my own every day. 7:30. I go over my chart. I just think this will help me, help you guys. And, everybody should be able to recognize more and more of the setups. No problem, Grace. So, all right, guys, we'll see y'all back again tomorrow. We had a good day in the 50K challenge. Let's keep the week going, baby. See y'all later. 3 threes, baby. Love the threes.